Welcome back. You might think your 401k is helping you save money for retirement, but what if I actually told you it might be working against you? Our financial expert, Coach Pete D'Arruda, dropped by the studio this morning to break down how Roth IRAs can be a better option for long-term gains.
Coach Pete, you are back, and today we're talking 401ks. I love in your book how you give a quick history lesson on 401ks, and I think that's good because not everybody understands, the history of the programs.
Back in the 90s, like early 90s, Ted Benna, his name was, basically kicked it off. It was like the 80s, 90s right there. Yeah. I had him on my show, and he was a CPA by trade. He said, Coach, I just was reading the tax code, and I discovered a little loophole here that would enable people to save with a pre-tax dollar and have it build up for retirement just like an IRA. And so he invented it, and he said, but it's been tampered with over the years, and a lot of people that have 401ks don't get what they really deserve, unfortunately.
Yeah, so let's talk about how it works so we know how it could really benefit us, because even to this day, I'm still a little bit unsure.
Well, number one, always take advantage of something to save for retirement, even if it's just $20 a pay period or whatever, because it builds momentum and you start figuring out it doesn't really hurt that much when you have it taken out pre-tax. That's a way for them to take the money out before the government gets a hold of it and put it aside for you. The big problem with 401ks, well, there's two big problems. Number one is, and IRAs too, you're getting a tax deduction today. Let's say you put in $1,000 over the year. That's pretty good. At least you're starting, right? So you get to reduce your taxes by $1,000. So instead of having to report to Uncle Sam that you made $50,000, now you report $49,000.
Got it.
Yeah, you're a little excited. Your CPA's excited because he told you to do that. The problem arises is 30 years from now, when that $1,000 you put in has grown to $20,000, let's say. Let's say your market hit good. And now you're retired and you want to take that money out. Do you pay tax on only the $1,000 that you put away, or do you pay tax on the whole $20,000 it's grown to?
What is it?
The whole $20,000.
Oh!
So it's like going to, let's say I'm a farmer out in the field and I'm planting my little seeds and I see a big dust cloud in the horizon, and then all of a sudden it's a big black SUV and it pulls in and four guys get out with the men in black sunglasses on, black suits, IRS agents. They say, Coach Pete, we're going to give you a choice. Farmer Pete there, because I'm on the farm. Yeah. Farmer Pete, we're going to give you a choice. We're either going to tax you today on the seeds you're putting in and we'll never come back again. You can, every single harvest we'll leave you alone. Or we won't tax you today, but we're going to be back every single year at the harvest, and we're going to take as many ears of corn as we decide to, because that's the tax code, the way it is. Which one would you do? You'd pay tax on the little bag of seed and never see those guys again, right?
Right, exactly.
Well, unfortunately, we all are. When we're doing the 401k as it exists today, we are basically telling them we don't want to be taxed on the seed. We want to pay the harvest fee every single year for the rest of our life when we start taking that money out. So what's the alternative? Roth IRA. Maybe you heard of the Roth. The Roth, you put money in, but you have to pay tax when you put the money in. So it's an IRA, but you pay tax. But every single year it grows tax-free. When you take the money out, it grows tax-free. When you pass away, the money goes tax-free to your next of kin. A regular IRA, when you pass away, it's a tax time bomb for your relatives. So there's a lot of advantages to the Roth IRA. Most people watching now have never even heard of it or had it explained correctly.
Right.
And some 401ks now will offer you the option to either put money in a regular 401k or a Roth 401k.
So it's up to the company to give us these options.
It is, and it really should be up to the company to educate you, but they don't. So who's the education fall on? You, right?
Yeah.
But I've got a site for that. PeteOnDemand.com will give you the total education. We also will give, for the next 10 callers, a no-cost total retirement plan and review. If you have a plan, which everybody has a plan, everyone has a planner, why not get a second opinion to make sure your planner is doing the right thing?
Exactly.
We get second opinions for everything in life, except for the most important part, our money. So we do that. I've been in this financial arena for over 28 and a half years. Never had a complaint for a reason, because we do what we say and we say what we do, and we keep other advisors in line as well.
All right, you heard it, Coach Pete. Thank you so much for being with us. Again, always love having you here.
Thank you.